So, this is the most anticipated lesson, the one on time, and consequently my approach. So, it's also the following up, the perfect following up to the previous lesson, the one on bias and PD arrays, because once you have determined the candle that you want to trade, you have determined the most likely direction and shape of that candle. Then you want to drop to the lower time frame to witness the power of 3 and to enter, possibly at the low of that candle, to write it down if bullish, or to the high of that candle to write it down if bearish. So I'm on Nasdaq because, as I said, I want to break down first this candle, then I will break down a weekly and better, and then a daily. Then if you want, I can break down also for our candle, if you want, but my suggestion is to stay on the daily, weekly, and when you are more advanced, you can trade even the monthly range. But my suggestion is stay on the daily and weekly range, anticipate those, learn to anticipate those in a good manner, in a precise manner, to anticipate a classic sell or buy candle and participate only on those, and you can make an entire career of those. So, come to the juice. We were here, as I said, the bias, let's remove. The bias for the next candle is a classic buy. We can't go down because there is this monthly order block blocking our way. After an expansion that has reached our first target, this rejection block, we witness a consolidation, a doji candle, so that's good. And now nothing can stop a thick, bulky green candle to the target. Now we range high, and as you know, price can only reverse at a higher time frame PD array. So without higher time frame PD array, let's say so 3 months, there is nothing until this 3 month order block. But let's stay safe. What is, you can target the high itself, or what is just above this propulsion block, monthly propulsion block, because it's built inside another block, this consecutively up close and also break. So it's a propulsion block, and price is very likely to, well, sure to reach this, very likely to reach this, and then we want to see what it does. It can reverse in the 3 month block, or it can go higher. Now, with the benefit of hindsight, we know that it gone higher, but in this case, let's frame the idea as in that moment. If you can't see the future, you try to guess it. So my target is target 1, target 2. We put a vertical line on the beginning of the new month. Let's do like this, yeah, and a vertical line at the end of the new month. Now, I like to view the monthly range within a 4 hour time frame, because it gives me a nice view. See, this is the previous month. Chop consolidation, chop consolidation, chop consolidation. Expansion, consolidation, expansion. So, as you know, the 3-step to high probability trading is gems. This is basically my approach. So plan direct time frame key level. Once you have the bias, mark the manipulation time, mark a pre-manipulation swing high or low, liquidity pool. So I will break this down. Come on. Okay. Okay, so we have developed the bias for the next monthly candle. We have marked the opening time and the closing time. That's the manipulation time. Well, there is a discussion, but use the opening time and also mark the closing, because you should know when to exit. There is a specific time. It's just interesting, huh? So now for the monthly range, I wanna use weekly. Well, you should use a higher time frame key level. Higher time frame in relation to what, you should ask? Well, in relation to the time frame you use to witness the power of 3 of the candle. So if we want to see the monthly candle through the 4-hour time frame and our entry is a 4-hour total soup, then we need a key level that we think, and with experience it will get easier and easier and easier, but the key level that is for sure higher than that time frame, so higher than 4 hours. We can see the weekly. Well, what we have, a reasonable key level, not go to this order block. Price can't go this low because of the monthly breaker, remember. So a reasonable key level is a tap into this weekly rejection block, because there are key level. Then if we go down to the daily, there is what you see? Well, I see a range, an FVG below. Let's mark this down. An FVG below, range, turtle soup, and rally. Close above with this candle, close above this daily candle. That's another block. So to refine, well, if price is likely to tap the weekly rejection block, probably it will also tap the daily order block. I mean, why not? So this, I choose this as my key level for the month. And if I want to trade a monthly candle, I do absolutely nothing until price reach this. I wait, I wait, I wait, I wait, I wait. Oh no, this is the bottom. I wait, boom. Now I can consider. So this is the pre-manipulation liquidity pool, and this is my approach. Turtle soup. Then you can go down to the daily, refining the entry to the 15 minute, 5 minutes. You can go crazy with that, but if you stick to this, your entry here, your stop loss should be on, as you know, as I explained to you in the past. So entry at least at the key level, maybe a bit lower, but let's do this. Stop loss at an intermediate term low, this one. Price shouldn't go down until this. These are some inefficiency, but there is no way. This is a rebalance area, so I use this low as my stop loss. You can go safe and use this one, but the risk reward is shit, so I will use this. My target is this, and potentially the monthly order block, because price is very likely to reach that. Then you do nothing until price reaches the key level. Then you do nothing again. You wait for the monthly range to develop. For the weekly, you look to the weekly, daily to the daily. You wait. So you took, I don't know, 80% of at target number 1, and you let the 20% reach this, because sometimes you can go wrong. As in my weekly range trade on GU, you remember, I took the majority off at a lower target than the one expected. And that's why I get precise entry with exit. So I anticipated a classic buy monthly candle, and I trade it, say power of 3. And now, so the important time aspect is the open, high, low, and close. And that's the main thing you should focus on. Now there is what, this is the true essence of CRT. The fact that candles are both time, listen closely, candles are both time and price ranges. Everybody see the price range of a candle. So they see, I don't know, okay, this a price range from this level 13,949.25 to this close above, target this, but they don't see the time aspect. So what are the components? I will take off this and just stick with this. What are the components to a monthly? So sorry, you understand, but let's make the chart cleaner. So let's take only this target. What are the components to a monthly candle? Wicks. The monthly candle is composed by week 1, this, week 2, week 3, and week 4. Now, week 1 and week 2 mark the low or high of the candle, while week 3 and week 4 mark the opposing end of the candle, always. So, go down to the 4 hour. Let's conclude the monthly range. Stop right here. This is the new month. Okay. So, look at this. CRT. Week 1. Friday until there. Then, week 2. And these are time ranges, not price ranges. Week 2, week 3, and finally week 4 until there. Then the new week start, but the month actually close there, so you can consider this part of week 4 if you wish. I won't, because this is a new week, CRT, week 1, week 2, 50%, and then I guess this is what happened. No? Okay, but you get the point. So, a monthly candle is composed by this candle, this 4 weekly candle. Now, week 2 is usually the manipulation, week 3 is the distribution, and week 4 is the top of the range. In this case, I said week 1 or 2 creates the low or high. How do you understand which one creates? The one that smacks into the key level. So, well, obviously, if this smacks into the key level on the end of Friday, it's likely that the week 2 will sweep candle 1 high and go above. But in this case, candle 1 creates the low and then go up from there. You can then go crazy. I don't know, but I will. Okay, see? This is a weekly candle. It's composed by, let's remove this, this, and this. A weekly candle is composed by 5 days. 1, 2, 3, 4, 5. Now, I will break down a weekly range trade, but Monday, Tuesday, Wednesday creates an opposing end of the range, in this case Monday, while Tuesday, Friday cap the weekly range, and you know that Tuesday creates the low. This was a consolidation reversal profile. If I go down to an hourly chart, consolidation, reversal profile. So let's make this transparent and this black. This is the weekly candle from 17, right? No, 16, 18, okay, so to there. And inside this, there is Wednesday range, and this is how you use CRT. So Wednesday 18 to look, oh, 18 here. This is Wednesday low, then Tuesday, no, sorry, this is, yeah, Wednesday low, then Tuesday open, go down, Tuesday sweep at time range. This is a price range, see, price low, soup, this is a time range. Tuesday sweep, and Wednesday is a classic daily candle because of the weekly profile. Consolidation, Tuesday reversal, Wednesday, look, if I go down to the 15-minute, Wednesday is a classic, you have your opening price, classic buy candle. All of this, this is why when you can refine your entry, because you have your monthly key level, you put an alert on, price hits there, you watch the weekly, you can watch then the daily, and you can refine it. Model 1, candle that stabbed into the low, close above, enter there, stop there, and you refine your entry to trade the monthly range. I done that only 2 times, and it feels amazing because your risk to reward will look something like this. That's how I get some of my weekly entries. Stop, as I said, below this, and you get almost 1 to 40 risk to reward. It's not crazy. I know it's tacky to use the RR tool, but I explain to you the logic. So the monthly is, and I can, if I remember correctly, this month, by the way, is another example of week 1 is low of the month, by the way. But if I remember correctly, there is one example on Bitcoin this month. No, on gold. Yeah, there. So I will do another monthly example, and finally, so now there we go. You have a higher, longer bias, so range low to range high, range low to range high, tap, bias is still up, we tap this rejection block, we are disrespecting this bearish order block while creating this bullish order block. So now this is a key level. Bias for next month is obviously up from there. This candle meet this rejection block. However, it wasn't. It was only the beginning of the expansion. We are coming off a huge consolidation there, so it's reasonable. Another not huge. I'm not expecting this month to deliver to this. It can happen if there is manual intervention, but a tradable candle should, and then the next month should be the actual expansion. As I said, big body, small body, big body. Now I don't remember what happened, but yeah, tradable candle and then huge, no, rejection. Okay, but same logic. So this is, if I remember correctly, week 2 low of the month. This monthly order block is also a weekly breaker. See the fractality. So weekly breaker block, thick candle that goes the turtle soup at an air frame array, close above, breaker, weekly. We have also an FVG pair with that. So with all that knowledge, we want to refine the key level, and we choose this as my monthly key level. For hour, do nothing until price reaches the key level. Nothing, unless you want to trade like a daily range or weekly range within it, it's okay, but to trade a monthly, do nothing. But you got a beautiful pre-manipulation liquidity pool, 4-hour turtle soup, and then do nothing again and let the monthly range play out. Then you can, once, obviously you need to be smart, once we close above the high that broke the low and we used the breaker, the 50%, look, the 50% of the breaker tapped there to rally higher, and we break above this high too, move the stock to break even, or even to this low. And there we go. So now we have start on Tuesday. Okay, I will incorporate this. So Friday and Tuesday, Friday, Sunday. Okay, so week 1, I incorporated 2 days from week 2, for the week of the previous month. Week 2, if you don't want, it's like this. If you don't want, but it's the same. Well, let's do the series. So it's this. Week 1, week 2, and then week 3 distribution. 3 candle model. To the high, candle 1 accumulation, candle 2 manipulation, and I say that because below this below this range, turtle soup rally, look at the retest of the previous low. There is another range. I think it's always like that. Yeah. So below the higher time frame range, we tap the key level, and we form another range at the end of the candle. And week 2 sweep, as I said before, if candle 2 creates tap the key level at the end, the very end of the candle, it's likely that the next will soup this. If not, and like on Tuesday reversal, then the low is formed on week 1. In this case, 2 turtle soup of the low and it is a Monday low of the week. Why? Why this week is a classic buy week, but with Monday low of the week, not Tuesday? Because we were already at a key level. Monday creates the low because the price had no needs to manipulate more. It has already manipulated and remanipulated this time range. Now rally. That's why you need to keep in mind also the monthly development, the weekly development, if you trade the daily, for example, because it's all nested together. Time. So now let's break for you down a weekly range trade on Nasdaq, a week that trade that I took on the early days on Twitter. You can find the post and is one of the first posts. It was this one. Same logic. Boom. So Monday, okay, week, we were, well, breaking highs, rejecting lows. It's a clear bullish market. We got this, and this is around the time that Romeo told me about CRT. Before it was made publicly, it added me in the chats group some days after this trade. No, some days before, and he hinted at me, and this was one of the first real trade that I took. A beautiful sensation. So we were in a clear bullish market. Down close candle are providing support to rally higher. We have a down close week, the second week of the month, and the bias for the next week is still up. Why? Because we have closed above this candle. False breakout reached the CRT low there. No, not yet reached, but okay, so this is a reasonable intraday target, maybe for the Asia session. Okay, but the bias for next week is probably up, probably. Then, so these are target for a daily range trade, a beautiful one, a weekly 30, a weekly 30. So you can skip it. Okay. We are in a bullish market, however, so every dip below a low, and this was the catalyst for price higher, because range, every dip below a low is to be bought, at least until proven otherwise. Also, I remember, okay, we're already above all-time high. So, week beginning, we mark the weekly open, we mark the weekly close, okay, and then a key level. We know that the price is likely, very likely, to go below these relatively equal lows. What is under these lows that can send price higher? Well, there is this, and I want to reiterate, I took this trade, my entry was down there, up there. So we took this order block because the opening price was never tapped, and it's just below this liquidity pool. So to me, this is my weekly key level. I make this liquidity pool lighter, and I like to view the weekly candle within the 1 hour time frame to see how clean this low looks. Price is likely to drop below this into this key level. Do nothing until price reaches the key level. And I remember this was a Wednesday low of the week. I remember this. Same logic. There we go. Pre-manipulation liquidity pool. Also, if you wanna see Monday, 13. Tuesday, Monday it was shorter. I remember why, because this was a bank holiday day, so part of the day was taken. Yeah. Monday, mega accumulation. Tuesday, Wednesday sweep. Well, let's Wednesday play out, and you do nothing, and you let the weekly range play out. Wednesday, manipulation, and Tuesday you don't even get the chance to buy below the open, because price open, look, open, and fly. And I took even this one, also I call this top of the range on Wednesday, 3 candle model, 1, 2, and potentially to the 50% of Tuesday. So same thing. And I guess if I go to the 5 minute below the range, there is a range. Yeah, so this is the low, and below this range there is another range, another sub, and if I can't go to the 1 minute, right? No, unavailable. Okay, there I guess there is a 1 minute range and another range. I don't get involved in this. This trade was taken exactly, I can say it because I take this, so remove, 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 remove. Tuesday never tapped the key level, so I was expecting this as up, and I didn't enter there, even though a lot of people were trapped because we were below the equal lows, but the key level wasn't tapped yet. So my entry was market here just before NFP. This is NFP, this thick candle, sorry, FOMC. So my entry was almost there, and my stop was below this down, no, on the what I said, no, this was one of the instances where there isn't an intermediate term low. I use a 1 to 3, I explain this, a blind 1 to 2, sorry, of the range that is subbed. 1 to 2 is a good measurement to the key level. I want to 2. The stop was around my entry was a bit higher, like this, if I remember correctly. You can reverse engineer the trade, it is on my Twitter, but almost like this, a blind 1 to 2 of the range that is subbed, and that's it. And I hold without any partial until there. This was my first partial at Monday high. Look at these highs, and then final target up there. Weekly range trade, almost in one candle. The end of Wednesday and Tuesday hit the target. So weekly range in 2 days. Same on the trade I broke down to you on JU. Always the same. So if you are asking me, and nobody's talking about this because people are ignorant and stupid, the way I get my precise entry are time, open or and close of a candle that I choose to trade. Important, not a random one. A candle that I develop a bias. I choose to trade that candle. I mark the open and close. I profile the candle, and within that I use the candle that makes up the higher time frame candle to know which CRT to play. In this case, it was, look, CRT, you enter in candle number 2 all the time. Yeah, because of this. This is the secret. Tuesday, key level of the week. Wednesday, entry there. 3 candle, classic buy. You are positioned already before this, but you are entering in a high probability, higher time frame candle. This case, the weekly. This case, Wednesday low of the week is a pin bar. But because of FOMC, it looks like a classic buy, almost. But the reasoning behind was CRT, low didn't tap, relative equal. I search for a higher time frame in relation to the hourly chart, PDR raise below, to put one extremity of the week, and the other was this all-time high at the time, liquidity pool. So you enter there and you are done here. Same, now I break down a daily range trade, if I remember one that I took recently. So daily range, well, the one on yes, the last post, my last post on Twitter was like this, and it's the same thing, this one. And by the way, I close it precisely here So it was so precise, this trade, amazing. And you know why this high? Because it's the high that broke the low, not market profile, basic of market profile. The high that broke the low. Now, it can go down and reach to the breaker itself, because this candle wasn't touched, so it can go down and reach to the breaker, and in this case we will witness maybe a potential buy opportunity from the breaker to the all-time high, or it can directly go up from there, more likely, maybe. But break down this trade. So well, daily bias, because weekly I can't get a weekly bias because the week is already at the end. So monthly is already beginning. So the only thing, if I'm trading, is trading a daily range. I can't play the monthly anymore, it's gone, and I wanna enter the low or no entry for me. So monthly gone, weekly gone, it rests the daily. What day is it? What day of the week is it? Well, it's Wednesday, and tomorrow the day I want to trade is Tuesday. So Tuesday usually cap the weekly range, and in this case, if and only if the week has reached its weekly objective. So in this case, we got Monday, Tuesday, to close, Wednesday, and Monday itself reached above this liquidity pool, and this liquidity pool, in fact, after this classic buy candle, Tuesday was a small range, consolidating. Wednesday, a relatively small range candle to take Tuesday high, and so I expect Tuesday to cap this weekly range, digging into this daily FVG and what's inside the daily FVG, this old high, not any random high, the high that broke the low. This was the birth of a trade idea, so previous day high, CRT if you want, but I took out 80% at Wednesday low and 20% to this second target. The higher time frame key level was this daily order block. Yeah, exactly this daily order block. It was, well, let's be precise, it's a bit off. Okay, this daily order block, so we mark out the opening of the candle we are willing to trade, the closing. Then I like to play the daily, looking at on the 15 minute. We have Wednesday high and Wednesday low. Okay, and so I want to sell above the open if I'm bearish. I do nothing until my key level is reached. I do nothing, I don't care, I may be wrong, or this might just be a consolidation. I wait, okay. There, press reach the key level. This was the primary inflation liquidity pool, in this case, range turtle soup, down there. I didn't take partial at 50% because it was very, very likely to go down there, and let the daily range played out. Boom, classic sell candle. Obviously on indices, the high of the day is very likely to form a New York in relation to London, because London is an inactive time for US indices. So now the big question, what did compose the daily candle? Answer, as Romeo said, 4-hour candles. And by the way, even on inches is 1, 5, 9, not 2, 6, 10, 14, this shit. No, it's 17, the open. Only a 3-hour candle because the futures market, the indices and commodities opens 1 hour late, 1 hour after. So, but 17 candle, 9, 1, 5, 9, the most active on indices. 1 AM is good on Forex. 13, 1 PM and 5 PM, closing of the day. So you have 30, candle 1 and candle 2 straight to the target. Same thing. So 15 minutes. Now high opening. You have timed range. So you have 1 to 9. 5 to 9. You have 9 to 1. This candle is 1 hour less for the reason I pointed you out. 1 to 5, and you can trade this alone. However, they are very inactive. As you see, 1 and 9 are the most high probability. Then you have 5 to 9, the 5 AM candle, and finally a soup of the time range 30. A soup of the 5 AM candle by the 9 AM. So then this is how you can verify your daily entry. 9 AM open, sell above the open of this candle, and you can trade this by itself. But why, if you can frame out the daily range, right? Open, rally, enter at the key level, and I did this on the 15 minute. So you understand this? Now remove. As soon as price hits my key level, I execute market. My invalidation was just above, because to the 62, if I remember correctly, because the price is unlikely, is already at a deep premium at the right time, so it's unlikely to go over. My target was Wednesday low, 80%. Heidelberg broke the low, the remaining 20%. And from this higher time frame PDRA, the market turned. Look. Let's go to the 30 minute, also the hourly. The market turned on itself until, so perfect entry and perfect exit. I hope I clarify my approach and the mysterious time, and let me know if you have any answer. I will try to answer them on the private chat on Telegram. I hope you will have a good rest of your weekend, and see you in the last